Hi, my name's Craig Vaughan from Professional Home Loans. Welcome to a presentation on obtaining a home loan when you're a lawyer and having that expensive lender's mortgage insurance waived. What we're going to look at in this quick presentation is, firstly, very briefly, what is lender's mortgage insurance, how lawyers, solicitors, barristers and so on can obtain a loan to 90% LVR without paying that lender's mortgage insurance, quick case study and example, and then the next steps in your purchase and or refinance. Firstly, very briefly, what is lender's mortgage insurance? You'll note that on the homepage of the website there is about a 12-minute video which goes into some great depth about what LMI is. So for the purposes of this presentation, just very briefly, LMI protects the lender. It's generally required when you don't have a 20% deposit, and it's not to be confused with personal or income protection. Genworth.com.au is the leading mortgage insurer, and so you can click on that link or go to that website and find some more information about LMI and what it does. Just so you have an idea though, it is a percentage-based system. So for example, 95% lend, that's the LVR there. Loan amount of between 3 and 500 grand would have a percentage 3.36% of the loan amount. I've done a quick example here. $150,000 loan on a 500 purchase, 90% LVR. The premium from the previous table was 1.97% right there, which makes the LMI premium $8,865. And for lawyers, doctors, accountants, it's at $8,865 we are trying to waive. You'll see though that mortgage insurance can be very expensive. On $1 million purchase, ranges from $22,000 to $28,000. So very, very expensive. We need to try and get that waived for you if we can. How can we get that waived? Look, LMI is all about protecting the bank against the borrower's default. That's the purpose of LMI. They take it out, the bank takes it out, because they're worried about their ability to get their money back should you default on the mortgage. Now, what they've just identified is that there are a certain group of occupation classes who do not default on their home loans. And so what they've defined, they've actually gone through their whole loan books and they've worked out, okay, these particular occupations, they do not default providing they meet these certain metrics. So effectively what some banks have said is, okay, if a client will meet these certain type metrics around income, membership, employment and so on, we will consider 90% with no LMI. And those metrics are occupation, need to be in an eligible occupation, you need to have appropriate memberships for that occupation, you need to have the income required, a certain threshold, and you also need to have clean credit. Occupation is pretty simple. For lawyers, obviously you're either a solicitor or a barrister. You need to have membership of your relevant practicing certificate. You need to be able to show that you have a practicing certificate in your state or territory to practice law in your state. That's pretty simple, and the purpose of that really is just to confirm to the bank that you are actually a lawyer and actually can practice. You need to have pass the income threshold of 150,000. So what this means is the banks have sort of said, well, look, if you're a lawyer earning more than 150,000, you are in high demand. There are, and you're unlikely to lose your position. There are exceptions. We had one a little while ago where the client was about 140 and he was going to get a pay rise that year, or likely to get a pay rise that year, and that was accepted. Another one was, for example, if you were both professionals, so you both met the policy, maybe one's an accountant, one's a lawyer, or there's two lawyers, and your income combined was over that threshold, that can also work as well. Need to have clean credit, no bankruptcies, defaults, even a small $200 telephone default would affect your ability to waive LMI. They really are looking for a certain type of client. If you don't meet the criteria, so for example you may not have the income level, we can still do 85%. So I noted at the start that generally you need 20% deposit to not pay mortgage insurance. If you don't meet the criteria for 90, we do have options at 85%. We also have options if you've been in your current position for 2 years, where we can get significant discounts on your mortgage insurance of up to 30%. And of course, if you've got a guarantor, that would waive mortgage insurance and the requirement for any deposit altogether. Just a quick case study. That the purpose really of this page is just to identify that you can use this policy for a number of different purposes. For example, you can refinance an existing home and use that to pay and use the deposit or the equity from that property to buy another property. This particular client refinanced a home loan, her own home, cashed out about $133,000 and used that as 2 deposits on 2 investment purchases. And in total, she did it all at 90% LVR, and in total, she saved about $48,000 in lender's mortgage insurance across all 3 loans. What are your next steps? Ultimately, with the no LMI, we need to get that approved up front. You know, it needs to be signed off on by some pretty big guys within the banks. You know, they do take this very seriously. They're taking on a lot of risk in their eyes, and therefore they does take a little bit longer to get approved. So we need to get you pre-approved first, fully verified, pre-approved with the waiver of LMI, and once you've done that, you can then make your offer, and ultimately, of course, you know, get the keys to your new home some months later, or your new investment property, or what have you. Your next steps, as in what is your actual very next step. Look, if you're just researching at this point in time, jump on the website, download the free report, heaps more information in there about waiving of LMI and so on. If you're looking to buy within the next 3 to 6 months, I recommend jumping online now and putting an inquiry in for a free strategy session. You'll find that pre-approvals generally last 3 to 6 months, so now would actually be the time for you to do that. And if you've actually found a home, or you've made an offer, or you've even been approved finance from another lender but paying LMI, jump online straight away or give us a call, and we need to get you going ASAP. That concludes this presentation. Thanks very much for your time. Here to help, my name's Craig Vaughan. Please get in contact with us should you need any assistance whatsoever. Bye for now.